What is going on, Lucid fans? Welcome back to Financial Journey. So today I got a treat for you. I got Tabb on once again. So we're going to give you a good, bad, and the ugly kind of viewpoint. Talk on some factors that is affecting Lucid behind the scenes, more so on the broader economy, and talk on Q4 expectations. So we're going to go over all the fun stuff. Make sure you guys hit that thumbs up and subscribe. But Tabb, I appreciate you joining me.
Cal, thanks for having me back on. I really appreciate it. It's been kind of a whirlwind of a month here. I think the last time I was on, we had talked about Lucid and what I thought was going to happen, and we're kind of down at that price point.
Yeah,
I
you
did
were
wish
on point.
I don't wish that on anyone, but I didn't know if it'd be that quickly. But again, I'd like to touch on maybe some broad market things, and then we'll bring it back to Lucid. So again, I know you know this, and probably most of your viewers, but just I'm going to touch on this. Stocks only move because there's a imbalance of supply and demand. I don't care what it is. No, we can speculate on what causes that imbalance, but unless there's more buyers than sellers, price will always move down and inversely. So again, don't let anyone tell you, hey, the stock's moving down because of this and this. That's speculation. The stock's moving down because there's not enough buyers. Why I think there's not enough buyers is because the market conditions that we're in. And right now, I believe big money is investing in safer bonds because the yields are so high right now. For me, or for you maybe, even if we have $100,000, why are we going to go buy treasury bonds at 4%? It's only $4,000 a year. It doesn't make a lot of sense. But if you have billions of dollars, if you have $1 billion, that's $40 million a year that you just safely can rest on while interest rates are going to continue to go up. So in the meantime, what I believe that you need to be doing, or what I'm doing, is I want to be starting to invest in stocks that once that wave of money comes back into the market, they're looking for homes on low valuations. And that might mean Lucid, but it might not. But you want to be in stocks that when that money flows back out of those bonds, it comes into your stocks that you're investing in. So that's what I think is happening now. And I don't think we got kind of a rug pull here with the Fed in terms of they raised their guidance. So CPI was coming down, which we want to see that. But so I thought that the guidance would stay the same at 4.8, but I think he raised it to 5.1, which means they're going to hike for longer. I don't know higher, but they're going to hike for longer, which just means we're going to have to wait longer. And so, unfortunately, I don't think big money is going to start laddering back into stocks until the end of 2023, and that's what I think is going to happen. So it might be painful here for the next few months.
Yeah, no, I get that. And I think a lot of institutions over the last month or so have been mirroring the exact same thing, except what their reasoning is saying it's a little bit more of a delayed domino effect due to the Feds increasing the rates at such a fast rate is going to really negatively affect a lot of consumers and also businesses. But we haven't seen those issues with businesses until most likely beginning of Q1 and onward for 2023. So I agree with you that a lot of institutions, and I've even noticed that secondary market and also dark pool, institutions have really taken a step back. So again, live ticker is going at the very bottom of the screen. So that block volume column is currently at 1.7 million, near close to power hour. That is very, very small. So on a daily basis, when we were at our peak, there was almost about 6 to 10 million shares being purchased by institutions on the secondary market. It is dramatically reduced. And I've kind of exactly what Tabb said. I think institutions are just taking a step back into safer plays. And right now, Lucid is a little bit more of a Wild West. And I think, in my opinion at least, it is going to come down to upcoming earnings. So if you go, was there anything else I guess you wanted to touch on as far as on the broad aspect?
No, so if we're going to play this game of being in the stock market, we can whine and cry about manipulation and all that, but there's the rules and advantages that as a retail we can take advantage of. Not the amount of things that the big money can take care of or take advantage of, but there are some that can benefit us. And for me, I don't need this money for the next 10 years. So I think I just want to prepare myself to be in the stocks when that money comes rushing back into the market, which I know it will once the Fed U-turns, I just want to be in those stocks because that's where that money's coming. And so yeah, that's what I'm looking for. I can't know the exact timing, and no one can other than if you're Jerome Powell, but who knows? He keeps changing his mind. But yeah, that's all I kind of wanted to talk about for macroeconomics. Yeah.
Yeah, no, I think overall it does play a big part. That's one factor that people don't necessarily think of is bigger picture. And I think that's one negative downfall of the big rally of since post-COVID kind of scenario is a lot of newer investors got in that maybe don't necessarily know, like for instance, what you were talking on, the macro events, the bigger events that really dictate bigger events and where things are going and what justifies that. So definitely good information. Hats off to you.
So if we want to bring it back to Lucid, though, again, I had mentioned that I'm sticking to my plan that we said a while back. Like, it's falling to where if I was confident in the fundamental or in terms of their balance sheet, I would be adding now. I'm just until I see next quarter and I can see some movement there, I'm not going to invest any more money in that personally. But if I hadn't started an investment and I was taking a risk on any stock is a risk, but at this valuation, like would be a fair value in my opinion, as long as they don't go bankrupt. Any company can go bankrupt, but yeah, I'm more excited because if Lucid can make it through this recession, I think that they're one of the companies that'll be positioned into really scaling out of this, because some of these bigger companies like Ford and GM who do have electric vehicles, they still aren't making a profit on their electric vehicle. Let's not kid ourselves. Now they're making profit on their ICE vehicles, and they want to get in the electric vehicle market, but they still haven't figured out how to make a profit. So Lucid's not alone in this. Even big companies aren't making profit. The only one making a consistent profit is Tesla. I'll just be honest with you. But if they stop slowing down there, I think we could accelerate out of this recession and be one of the bigger players. And so I'm kind of excited about it. I don't know what you think.
I completely agree with you that Lucid does have a very, very big opportunity right now. So I think Elon has a lot going on. Tesla has expanded at a fairly fast rate. So on a downtrend, they're going to get significantly hurt. Lucid is in a very good position that they've set up all the foundations for expansion. They haven't necessarily done it yet. So any negative downtrend in the economy won't really hurt them on a same ratio basis as it would with Tesla, for instance. So I agree with you. If you are making a brand new position and just waking up for the first time, wow, this is a steal of a deal, especially more so with the institutions that are backing it. So I think it all is a very good position. But I guess this is a good transition point. Q4 earnings. I personally feel Q4 earnings, there's going to be several and a lot of big things that they're going to say. So I'll let you start off. What is some things, I guess, you as obviously yourself who likes to think bigger picture, what are you going to be looking for from the Q4 earnings that might make it a good buy, might make it kind of a sell, or like what are you looking at?
So I don't know if you remember the last time. I'm constantly going to look at if the burn rate is slowing compared to the revenue. So if revenue percentage goes up 50%, I want the burn rate to only go up 45%. You know what I'm saying? I want that break-even point to be getting closer together, not farther apart. That's really the only thing that I'm looking for. But on a technical level or on a fundamental level, just let's throw that out. Let's say everything's fine on the balance sheet. On a fundamental level, like it really comes down to production and revenue. And so I'm kind of curious on what you think in terms of how many vehicles you think that they're going to deliver or produce and deliver. I know those are two different numbers, but what do you think on that?
Well, as far as the 2022, between the 6 to 7, I feel that they can hit that production. I think that's a fairly safe bet. They won't blow it out of the water, but they'll beat it. The negative aspect is deliveries. And of course, coming from an investor standpoint, when a company gives an explanation on why they didn't meet something, of course, it could be perceived as positive or negative. I think Lucid has a very interesting thing that they could easily justify the lack of deliveries due to most likely transportation and kind of surrounding that. Based on CPI, the latest ones, transportation costs have gone up considerably, even more so shipping internationally. So Europe and Saudi Arabia, which is destined, I believe it was started a couple this week for the Dream Editions in Europe. So I think that will be some factors to watch for. But 2023, I think this is literally going to be a make it or break it. Previously, I believe it is 49,000 for the estimate for, and that's based on 2021. 12,000 of that was estimated for the Gravity. So it's fair to say subtract that, give or take. So I think they need to do a bare minimum of 30,000 for 2023 for production. Anything less than that is going to be seen very, very negative from the market viewpoint. Especially it's going to be the pure, like where their actual demand is. And you also, I think you brought up during our live stream, which actually was a very, very good point, is you have to factor in, yes, it's all fine and dandy to have, let's say, 5,000 or whatever it is, like I think it's 34 right now, but reservations. If they only do 30,000 in 1 year, how are we ever going to get those reservations? I think that's one of the big attributing factors why there were so many cancellations, is just delays as well. Like people didn't want to continue to wait, in also increasing costs. So I think you're right. Q4 is going to be very much dependent on production and to see if the capex has been reducing. Over the last little bit, it has been reducing, but is it in line with forecasts? I don't know. So what's your takeaways?
Oh, I have a question. So I can't find this answer. How many Air Grand Tourings are they going to produce until they move on to just the Touring and then the Pure? Do we know that, or is that just kind of in the air?
It's just in the air, and I guess that's a good pun intended, air. But but yeah, no, I was kind of looking at that, and generally based on the forecast, they just characterized Air as just a broad concept, saying that they're going to be doing initial forecast at least 20,000 Airs in 2022, and I believe it was 36 in 2023. So
across all categories.
Yeah.
Okay.
So I think maybe I don't know. Every time I say this out loud, I seem to get a lot of criticism. I think Lucid is realizing that the Air Grand Touring isn't as desirable as they originally thought. This is why there is a lot lying around, and maybe possibly that's why they started that aspect ready to deliver part of their website, and also just was trying to call customers back to try and get them to take back their Air Grand Touring that they previously canceled. I think that is, they just realized that it's not as desirable at that price point as what they would have thought. My own opinion. So I think the sooner that they move away from that into the Pure and just the Touring, more specifically Pure, but I think that's when they're going to be making the big money. But
So what I'd like to know is, again, I don't run a car company, so I don't pretend to be a CEO, but it seems to me if the demand for the Grand Touring is waning, now I know they have supplies and you can't just shut down a line, I get that, but you should be able to see, like, okay, hey, we have more reservations for the Touring and the Pure. Let's stop making the Grand Touring. We can continue to sell those off the lot, but start making the Touring. You have demand for that. Let's fill that, and then we can go back to making Grand Touring if we need to. So I don't understand that, other than maybe it's just a supply issue. They want to run through their inventory of supply for the Grand Touring. They just want to finish that out. But I don't know why they don't start the lower price vehicle if they have the demand, but they don't have the demand for the Grand Touring. Let's start selling vehicles here. I don't understand it.
Yeah, you asked the $1 million question right there. But whether investors actually acknowledge that, because I think people are still in, whether it be denial or maybe I'm completely under the wrong impression, but I think that there is no real demand for the Air Grand Touring or the Sapphire, even though a lot of people just say, well, it could be used on the same assembly line and there's no additional costs that Lucid took on for instance, the Air Sapphire and things like that. But I don't know. At this stage, I think looking forward is the next couple of vehicles, so the Pure and then eventually the Gravity. That's something to look forward to in the beginning. That's something that I think Lucid will also have to bring up in their Q4 earnings, is launch of their reservations for the Gravity, because that is probably one of the biggest things that they could do, and they have to do it very smart and accurate. They can't just launch it and have their website not work. They have to make sure everything is pristine and works 100%, or else that whole rollout might just be a dud. And I think the Gravity might be Lucid's possibly their saving grace as well, depending on price point. They haven't even come out with that as well. A lot of speculation, but...
And that's the thing you have to consider too. I mean, if you sell a lower price vehicle, in terms of getting your margins go down, and so you have to sell, or your revenue goes down, so you have to sell more vehicles to make up the same amount. We have to remember that, and maybe you can overcome that. I'd rather sell, 4 Pures than 1 Grand Touring. You're going to have more revenue and margin built in there, but I don't know if that's the case. But I know most of your viewers probably don't even care about this stuff. What's the price going to be? What's the price going to be at Q4 earnings? What do you think?
At the Q4 earnings or post it?
Well, after the
okay. So assuming they hit their 2022 and they give at least 30 or more thousand for the targets for that, and they don't mess up and say something obscure, I could easily see us getting to around the $8 to $10 range. I think that is fairly realistic because just the market conditions have changed since I think our last price target, which is completely weird. I think oddly enough, wasn't the price around $14 when we were last streaming?
I think it was closer to 11.
Okay, but yeah, like night and day difference compared to right now. Although I give you a lot of credit, you were on point. Like if you were to go to Vegas and say all on number 7, like you're pretty on point with that. Like hats off to you.
I appreciate it. Well, it does. Again, it wasn't an emotional price target. It was something that I see kind of what big money kind of values these stocks. Now, again, there's probably some more downside in the market condition that we're in. But if it wasn't for that, I'd feel like this is a pretty fair value. So I can't guarantee you it's not going to go lower than this, but I think it's a pretty fair value in terms of if Lucid was running on all cylinders and they were giving increasingly better guidance. Like, man, I think this is a decent price. Not financial advice for anybody else, but that's what I. But here's what I'd like from you. I have a couple questions, that I would like answered from your opinion, and then I would come up with a fundamental value or what I think the price is going to be. So do you think we'll deliver 2,000 vehicles? That's delivered by Q4. So right now we have delivered 2,437 vehicles, and we've produced 3,687. So we've delivered about 60% of the vehicles we've produced. Yeah. If that trend continues, I think we'll get to the 2,000 delivery. Do you think that's fair, or do you think it'd be more than that?
Well, to be fully fair, so in the Q3 earnings, they said that we're around 300 vehicles a day. Based on bears, I think it's 400, maybe 500. Might be pushing it, but so for 3, and our earnings were on November, so it's already midway through the Q4 earnings. So I think realistically we would have delivered maybe 3,500. So if it is fair that 60%, I think it would be a little bit more, I think just over that 2,000.
Okay.
Based on that.
I'll put it 3,500. 60% would be 2,100 vehicles. I'm going to write that down. I can get on board with that. So 2,100 vehicles. Are we still going to go with the 154,000 price point per? I'd have to lower that a little bit because I know they've lowered the price a little bit for some people. So I don't think every vehicle's that. So I would say. So for
argument's sake, I think 145 would be the median, right?
That's what I was going to say. So 145,000 times 2,100 vehicles is 304.5 million in revenue. Okay, so that's realistic, I think. And then if I'm going to still give it, I don't want to give it this because just of the market that we're in and the balance sheet, but just to be fair, I said 60 times earnings. So I'm going to multiply that times 60. So we got 18.27 billion. And then I'm going to divide that. So do you think there's going to be any more dilution between now and quarter?
No. If anything, it'll be Q2.
Okay. So I'm going to keep the outstanding shares as 1.68 billion. Man, that gets us to $10.87. I mean, do I think it's going to hit that? No, I don't. But I mean, that's how I would value the stock.
Yeah, I guess to fairly, I'll just pull this up right now. So the multiples for right now. So you said 60. Right now we are at a 30.7x. So do you still feel this 60 is realistic?
No,
What if
no.
you cut it down to 30, for instance? What would that give you for calculations?
For 30 times 30. Oops. What do we have? 304.5 million times 30 by 1.68 billion.
Probably around
Oops.
750.
Like that's. Oh, no, I don't have that. So I have 304.5 million in revenue. And you said times 30
Yeah.
times?
Yeah.
Yeah, divided by the 1.68 million or billion. That puts it at 543.
Well then. I know the couple analysts, I think there's 5 analysts right now that have given ratings on or estimates on the Q4 revenue, and I think the median is 395 million. So we're kind of in line with that. But even if you use the 395 based on the 30x, it would be pretty still lower than what we are at, I believe.
If you use 400 million times 30, you're getting you're getting 7.14, $7.40. So I don't think 30 is fair because of the growth rate that we are going to go. Because if you go from 7,000 this year or a little bit more this year to 30,000 like you think that they're going to get to, that's a much higher growth rate than 30%. Now I think 60 won't be fair forever. I would step that down, quarter over quarter a little bit and get to 30 in 2 years. But I think if you're valuing Lucid at a 30 times multiple, I would give it more than that just for me.
Well, the future is 6.7 right now. So very the expectations of Lucid in the future are very, very slim. So on a side note though, I know a lot of people loved your content on options. So right now, given the circumstances, let's say it could be range bound post Q4 earnings anywhere from 750 to around 10 for argument's sake. How would you play options?
So that's a good point. And so I've been raising I have, I can look at it right now. I have 2,200 shares of Lucid. So that means I can sell 22 contracts. Now I spread that out over, several weeks, in different price points, but I've been raising right around $450 a week in just cash. And so I'm actually putting that towards Rivian right now for free shares. I don't buy it. And again, I don't want to get into the fundamentals of Rivian. I know this isn't a Rivian video, but it just kind of diversifies my EV play a little bit. But it's free shares. So if I lose all that money, it was just cash that I raised from Lucid. I remember our last video, we had a commenter that's concerned about when you have high average, how do you sell options? And so if we're pretty convinced that at the best it's gonna be $10, I would go find a $10 strike that is a few weeks out. I don't know, even back in February, it's it's hard when it's falling like this. You don't sell covered calls on a down day. You want to sell covered calls on an up day if you want the premiums to be higher. So right now I just pay attention to them, and then I roll them if they become close to the money. And I know you preach on being careful because you can lose your shares. But if you don't plan on ever selling these shares, or at least for the next 5 years, you can always roll them way out. I'm looking at January 27th, 2023. If you were to sell an $8.50 call, right now it's at 18 cents, which would mean you'd get $18. If it spikes up to that, you can go all the way out to January of 2025, and for that same $18, I mean, you could sell a $32 call and make money on that. Now I know. So what'll happen is if the market starts going up after you sell that $8.50 call, that call is going to gain in value. So if you wanted to buy that back, you're going to be losing money. But if you don't care about selling these shares all the way past 2025, the other thing that's going to happen in 2025 options chain is those prices are going to go up. So yeah, you might not actually be able to make extra premium on that, but would you be happy at selling that at $32 in January 2025? I would. I think they'd be way over. That's just me personally. But that would be higher than my average right now anyways. So even if I lost my shares, the price is going to be up like 300% or 400%. I'm going to be happy at that point. So again, there's ways to do it. I know this is kind of confusing, and without really like showing you, exactly how to make an options trade, it might be a little difficult to understand. But yeah, that's what I'm doing. I sell covered calls weekly close to the money. And so that's how I generate income.
Yeah, no, I do the same thing. I actually did sell some covered calls that's expiring today for 750. I know it was a bold anticipation, but based on how things were, it was heading down. So, but same as you though, you have to ladder it out. Don't have all your eggs in one basket. You kind of have to have some optimistic. And if you have, I think based on what that comment was for that individual, it is very easy that you can confidently do options if you're above your average, whereas below you're kind of stuck. But you're right, you can always roll it out and kind of avoid that.
So I disagree on that. I know people get caught up on your average, but you didn't buy every share at your average. So if you want to feel confident in so you don't lose money on any share, if you bought at $7, whenever that was, you can sell a $7.50 call for those 100 shares that you bought, and you didn't lose any money. You made money on that. Let's say the stock goes to $8 next week, and I'd sell a $7.50 strike. You lose only those 100 shares. So you made $50 plus whatever the premium was on that. Does that make sense? So you don't have to.
But I guess for argument's sake, though, this is why if you have, for instance, if you buy right now 669, and let's say the only thing that you can do, let's say you're optimistic, like you can, if you sell options that is above your strike, then yeah, hypothetically, or your average, then you're good. But let's say your average is 18, and then you're selling $7 kind of calls, or 8 or whatever it is, then you do pose that risk per se. I think that's what I'm trying to get across. But again, I could be wrong.
I disagree. Let's use that scenario. Let's use that scenario. You're buying right now at 669, and you bought 100 shares at 669. You're obviously, if your average is higher than that, which most people are, you're going to lower your average instantaneously a little bit. But put that aside. You instantaneously buy those at 669, and then you go to December 30th and sell a $7 covered call, and right now it's at 13 cents. So you instantly get $13 in your bank account, and if it never hits $7 by December 30th, you just keep that premium and you can do it again. But if it goes to $1,000, it doesn't matter. Just those 100 shares, you would have made $13, and you agreed to sell those $7 or those shares at $7. You made another $31 plus you lost those 100 shares, but you have several other 100 shares. You didn't lose money on that purchase. Do you see what I'm saying? It has nothing to do with what your average is.
Yeah, no, definitely.
Your average will go back to what it was before you bought that 100 shares.
Yeah.
You see what I'm saying?
No, definitely. Yeah. No, yeah, that's I think it's a very profitable way to do options. And on a side note, for those of you that are watching, we did try and do a way that you can see Tabb's screen. Unfortunately, didn't necessarily work out so much with Skype. So we are still working on that, because I know Tabb clearly knows his way around options activity, and you guys can greatly benefit from that. So we're still going to try and figure out how to have him show you kind of the ins and outs of what he does, for instance, for options activity. So that's just more of a side note. So with all of that, I guess what is your, I guess I never really touched on your aspect. So if you were to give a price prediction post Q4 earnings, what would be your bull and your bear case as far as a price target?
So again, here's what I do, and this will, I know it sounds wishy-washy, but it constantly changes. So I have to look back at what I know as snapshot in time. We looked at Q3 earnings, and according to fair market value, I gave it a 6.98 or $7 price target. So what I do is I drew a dot, or I put a line on my chart. I'm looking at my chart right now, right at 6.98. And then when's Q4 earnings? Probably February, beginning of February.
Yeah.
Okay, so I put that $7, and at that time we were clearly overvalued in my opinion. But then I try to predict how many vehicles they're going to deliver and the revenue, and then I draw that line to the next, around the next quarter, and then I can see like if we're underneath that, and right now we're underneath that, just in my opinion. Now there's other factors like the balance sheet and other things that go into that, but just all that aside, just price prediction. I think the last numbers that I had around the $2,000 mark, and I lowered my valuation to about 50 times. I still think that's fair. And so bull and bear case is probably in the mid eights. So 833 to, right, I got to look at my notes here because I write down notes and I change these. Let's see. So I have, sorry. Yeah, between 833 and 890. I think that would be the fair market price. Again, there's a lot of other economic things going on right now, and I don't know exactly what's going to happen. But I think that's fair market value in a normal market.
That's fair. Yeah, that's pretty good. But yeah, no, I think a lot of investors would still be very much happy with that, assuming everything does go right on the Q4 earnings. But going to go into depth a little bit more on another video about all the things that you need to know for Q4. But Tabb, I really appreciate you bringing your knowledge onto the channel. It's always greatly appreciated, and I know a lot of individuals really do benefit from it.
Cal, I appreciate all your information and knowledge that you give. I watch pretty much all your videos, so thank you for what you do, and thanks for having me on, man. I appreciate it.
Yeah, thank you very much. And again, for everyone, including you, Tabb, you guys have a happy holidays, Merry Christmas, Hanukkah, whatever floats your boat, whatever you guys celebrate. Have a good one, guys.